There is a world behind the charts, a world most traders never learn to enter, a world where the battle isn't with price, but with the unseen forces inside your own mind: fear, greed, impatience, expectation, self-doubt. These are the real market movers, and until you learn to master them, no strategy, no indicator, no pattern will ever bring you consistency. This is the journey into trading psychology, the real edge, the invisible skill set behind every professional trader you admire. So take a breath, slow down, let your mind settle for a moment, because today we are going deeper, beyond the charts, beyond the noise, beyond the surface level talk of entries and exits. Today we're exploring the inner world of day trading large caps and SPY, the part of trading that takes years to understand but only seconds to transform you once you finally see the truth. Welcome to Mind Over Markets, where we don't just study the market, we study the trader. There's a moment every trader remembers, a moment when the chart goes silent, the market freezes in time, and for a few seconds, you can hear your own heartbeat louder than the price ticking. For some traders, that moment happens the first time they trade SPY. For others, it happens after their first big win or their first painful loss. But for every trader who walks into the world of day trading large caps, that moment eventually comes. And it forces a simple question: am I in control, or is the market controlling me? That question is where trading psychology begins. Because day trading SPY is not a technical battle, it's a psychological one. A battle between your plans and your impulses, your logic and your fear, your discipline and your ego. Let me tell you a story. There was a trader named Daniel, smart, calculated, methodical. He spent months mastering patterns, studying market structure, replaying charts late at night. And then one day he decided he was ready to trade SPY. There is a quiet truth about day trading that no one tells you in the beginning. A truth you only discover after you've stared at the charts long enough, lost enough trades, and felt enough emotional storms inside you. The truth is this: you are not trading the market. You are trading yourself. Every candle, every breakout, every pullback, every whip is really a mirror, a reflection of your beliefs, your fears, your insecurities, your impulses, and nowhere does this become clearer than when you trade large caps, especially SPY. Because SPY is different. It doesn't explode like small caps. It doesn't give you a dopamine rush with wild 20% moves. It doesn't scream opportunity. It whispers. It moves with precision, rhythm, and intention. And if your mind isn't steady, you'll never be able to hear what it's actually telling you. So let me take you into the psychology of this world. Not the strategies, not the indicators, not the setups, but the inner game. The invisible battle happening inside your head every second the market is open. Because mastering this inner world is the only way to master day trading large caps. There was a trader named Daniel. Like many new traders, he thought his biggest enemy was his lack of skill. So he studied harder. He learned patterns, volume analysis, market structure. He replayed charts until 2 a.m. He created rules, checklists, and routines. But despite all that preparation, every time he traded SPY, something strange happened. He hesitated on entries he should have taken. He exited winners far too early. He held losers far too long. And after one sharp whip candle, he spiraled into revenge trades without even realizing it. He would stare at the chart, feeling like the market was attacking him personally, like every reverse move was designed specifically to hurt him. He told himself he had a strategy problem, but he didn't. He had a mind problem. And the truth is, almost every trader does. Because SPY doesn't just test your technicals, it tests your mind's ability to remain still while the market moves fast. It tests your discipline when your instincts scream at you to act. It tests your patience when everything inside you wants instant results. It tests your relationship with money, your beliefs about risk, your emotional thresholds, and your tolerance for uncertainty. SPY is not just a ticker, it's a psychological exam. And every trading day, you sit for that exam again. Let's begin with the first psychological trap, the illusion of safety. New traders often believe SPY is safer than trading small caps because the moves look smaller, cleaner, smoother. But what they don't realize is this: because the moves look safer, they increase their size. They trade bigger, faster, with more confidence than they should. And suddenly a 10-cent move against them feels like a tidal wave. Not because the loss is big, but because psychologically the loss is unexpected. Unexpected pain hurts more than expected pain. That's why traders panic on small pullbacks. Not because of the money, but because their mind wasn't prepared to feel discomfort. When you trade SPY, the danger is not the volatility. The danger is the false sense of control. The belief that because SPY is predictable, you will always know what it will do next. But the moment you believe you know the future, you stop thinking clearly. You stop following your rules. You start trading from ego, and ego is the silent killer of traders. The second psychological challenge is the speed of decision-making. Large caps move with a rhythm that leaves no room for emotional hesitation. The moment your brain gets scared, your hands freeze. You hesitate, you doubt, you question your plan. The setup is there. The entry is clean. Everything aligns. But your mind whispers, what if this time it fails? What if I lose again? What if I'm wrong? And that whisper is all it takes for the opportunity to pass. Then guilt appears, frustration, self-blame. You start chasing, entering late, forcing trades, trying to recover the feeling of control you just lost. Day trading is not just about reading charts, it's about reading yourself, understanding how your body reacts to risk, how your mind responds to uncertainty, how your emotions rise and fall with every candle. The third psychological trap is the cycle of overconfidence and self-doubt. A trader can have 2 strong winning days and suddenly feel invincible. They convince themselves they finally get it. They increase size. They enter aggressively. They loosen their rules. Because winning feels like proof. Proof that they are good, proof that they are skilled, proof that they deserve success. But the market does not reward emotion. The moment you trade from confidence instead of discipline, you become vulnerable. And in one quick reversal, SPY takes back what it gave. All the confidence dissolves, all the clarity disappears, and the trader is left staring at the screen, wondering how everything flips so fast. What they don't realize is that their wins were not the problem. Their belief about those wins was. They thought the wins were a sign of mastery, but the truth is wins are just moments. And moments don't define a trader. Behavior does. Discipline does. Patience does. Emotional neutrality does. Consistent traders are not attached to their wins and not destroyed by their losses. They simply trade the next moment as if the last one never existed. But perhaps the most dangerous psychological enemy is the instinct to get back what you lost. Revenge trading. Every trader knows this feeling. The moment you take a loss, your mind shifts. The loss becomes a personal wound, a threat to your identity, your competence, your confidence. The market didn't just take money from you. It took a piece of your certainty, your control, your stability. And so the mind seeks restoration. It wants immediate resolution, immediate recovery, immediate healing. That's when traders take the worst trades of their lives. Not because they see opportunity, but because they feel emotional imbalance. They're not trying to win. They're trying to stop hurting. But trading from pain is the fastest path to even deeper pain. Revenge trading doesn't happen because you're reckless. It happens because the brain is wired to escape discomfort, to fix emotional wounds as quickly as possible. When you understand this, you stop blaming yourself. You stop feeling broken. You realize that your brain is doing exactly what it was designed to do. Your job is not to suppress your emotions. Your job is to learn how to respond to them without letting them control your decisions. And this brings us to the heart of trading psychology self-awareness. Real trading mastery is not mastering strategies. It's mastering your internal triggers. The moment you feel your heart speed up, the moment your breathing shifts, the moment your mind starts calculating P&L instead of setups, your subconscious is taking control of your trading. That is the moment most traders fall apart. But it's also the moment that separates amateurs from professionals. Professionals feel the same emotions you do, but they recognize them faster. They label them accurately. And they know how to break the emotional loop before it becomes a destructive action. This is the beginning of your journey into the deeper psychological game of day trading SPY. Not the game on the charts, the game inside your mind. Because once you understand your mind, the market becomes easier, clearer, quieter, and when the mind is quiet, you can finally hear the truth that SPY has been whispering all along. There is a moment in every trader's journey when the chart stops being a collection of candles and becomes a reflection of their inner world. In the beginning, you think you're fighting price. But as time passes, you start to realize you are fighting something far more powerful, your own expectations. Expectations about how much you should be making. Expectations about how often you should be right. Expectations about how the market should behave. And these expectations slowly shape the way you see the market. They create tension. They create pressure. They create emotional weight. This is the psychological trap that silently destroys day traders without them ever realizing what happened. Because the more you expect from the market becomes a source of stress rather than a place of opportunity. Let's continue the story of Daniel. After months of struggling, he began to notice a pattern. He wasn't losing because he lacked skill. He was losing because he carried too much mental noise into the market. Noise like, I need to make back yesterday's loss. I should be further along by now. If I don't make money today, I'm failing. If I miss this move, I'll hate myself. He didn't see it at first, but this noise controlled everything. It influenced when he entered, when he exited, how aggressively he sized up, and how quickly he panicked. He wasn't trading SPY. He was trading his emotional baggage. And SPY, with its fast but measured movements, exposed that weakness with brutal clarity. Every hesitation, every impulse, every doubt was magnified. And one day, after a series of small but painful mistakes, Daniel finally asked himself the question every serious trader must face: why am I really trading? It wasn't money, not deep down. It was validation, a desire to prove he was capable, a desire to feel in control, a desire to feel successful. And the market became the judge. This is one of the deepest psychological truths about day trading. Most traders are not seeking profit. They are seeking emotional resolution. When you understand this, you start to see why day trading SPY is so emotionally demanding. SPY doesn't move like a lottery ticket. It doesn't inflate your hopes with huge green candles. It doesn't give you emotional highs from explosive breakouts. It gives you something different: precision, speed, discipline. And if your internal world lacks clarity, SPY will bring that chaos directly into your trading decisions. Let's explore some of the deepest psychological challenges you will face when you day trade large caps. The first challenge is what I call the should-have reflex. It appears after you miss a move, after you exit too early, after you stop out and watch the price reverse in your favor. Your mind repeats the same phrase: I should have held. I should have waited. I should have entered sooner. I should have taken partials. I should have trusted myself. This should have reflex is toxic, not because it's wrong, but because it rewrites the past and uses that rewritten past to punish you in the present. It destroys confidence. It fuels revenge trades. It creates tension every time you try to take a new setup. The mind becomes obsessed with rewriting history. But trading isn't about rewriting history. It's about responding to the present with clarity. And clarity cannot exist when you are haunted by the ghosts of your previous trades. The second challenge is what I call microfear. Most traders know about big fears. Fear of blowing up an account, fear of losing an entire week's profit, fear of being wrong in a big way. But microfear is different. Microfear is subtle. It's the tiny hesitation before clicking the buy button. It's the small tension in your chest as you watch a candle form. It's the mental flinch when price pulls back 2 cents. It's the slight tightening of your jaw when the spread widens for a moment. Microfear is like sand in the gears of your decision-making. Little by little, it makes you less decisive, more reactive, less confident, more emotional. And SPY exposes microfear because SPY moves fast enough that hesitation destroys opportunity instantly. When you feel microfear, you either enter too late or exit too early. Both outcomes come from the same place you're trying to avoid discomfort instead of focusing on execution. When you trade to avoid discomfort, you become predictable, and a predictable trader is a losing trader. The third psychological challenge is emotional spillover. Emotional spillover happens when one trade affects the next one, not because of P&L, but because of the emotions tied to that P&L. When you win big, you become too confident, too relaxed, too willing to take risks that don't actually make sense. When you lose big, you become too cautious, too fearful, too desperate to protect yourself. Both states, euphoria and fear, corrupt your objectivity. The best traders don't let emotions spill over from one trade to another. They treat each moment as its own reality, its own universe, its own independent opportunity. This is one of the hardest psychological skills to develop because your brain is not built for neutrality. It's built for pattern recognition and emotional continuity. The brain assumes the next moment will feel like the last one. So if your last trade was painful, your brain expects more pain. If your last trade was rewarding, your brain expects more reward. Your job as a trader is to break this emotional continuity, to reset your internal state before each decision. To trade the chart, you see not the emotions, you feel. The fourth psychological challenge is something few traders ever recognize: the identity trap. When you tie your identity to being a trader, every outcome becomes personal. Every loss feels like failure. Every win feels like validation. Your self-worth becomes entangled with your P&L. This creates emotional volatility far more dangerous than market volatility. Because when your identity is at stake, you cannot think objectively. Your mind becomes rigid, fearful, defensive, judgmental. You start forcing the market to cooperate with who you believe you are. This identity trap makes traders cling to bias. They believe the market should move in their direction because it matches their analysis. And when it doesn't, they feel personally attacked. The truth is simple. The market doesn't know you. It doesn't care about you. It doesn't even see you. And that's the beauty of it. The market is neutral. It reflects nothing except order flow pressure and liquidity. Your job is to become equally neutral. When your identity is separate from your results, you move with the market instead of fighting it. You accept losses with grace. You take wins with humility. You trade with clarity instead of emotional attachment. Now let's talk about one of the most important psychological principles in all of day trading: emotional bandwidth. Emotional bandwidth is the amount of psychological energy you have available to make objective decisions. When your bandwidth is high, you can handle volatility, unexpected moves, tight stops, and fast price action with calm precision. But when your bandwidth is low, every small fluctuation feels threatening. Every red candle feels personal. Every trade feels heavier than it should. And the most critical truth is this: your bandwidth is not reset by sleep. It is reset by emotional regulation. You can sleep 8 hours and still wake up with low bandwidth if you're carrying stress, worry, or pressure. When your bandwidth is low, SPY becomes overwhelming, because SPY requires rapid decisions that cannot be made from a stressed mind. This is why you can trade perfectly on Monday and fall apart on Tuesday, even though you slept the same and used the same strategy. Your brain wasn't in the same place. Professional traders understand this. That's why they protect their emotional bandwidth like a precious resource. They don't trade when they're emotionally drained. They don't force trades when their mind feels tight. They don't chase the market when they're not mentally prepared. They know that the quality of a trader's decisions comes from the quality of their internal state, not their setup, not their indicator, not their scanner, their mind. And this leads us into one of the deepest psychological truths about trading large caps and SPY. The market rewards emotional neutrality, not being confident, not being aggressive, not being fearless, but being neutral. Neutrality is the state where you have no emotional agenda. You are not seeking validation. You are not trying to avoid pain. You are not trying to prove anything. You are simply responding to the information the market is giving you in real time. Neutrality is the mindset where your mind becomes quiet and your intuition becomes sharp. You see the flow, you feel the rhythm, you sense the pressure building, you read the context without overthinking. And in that state, you begin to trade with ease instead of effort, with clarity instead of confusion, with discipline instead of impulse. This is not something you force. It is something you cultivate through awareness, through consistency, through emotional mastery. And that is what part 3 will dive into: the tools, principles, and psychological frameworks that transform a struggling trader into a consistently calm, confident, neutral, high-performance day trader of SPY and large caps. There comes a point in every trader's journey when they realize that the market will never change for them. It will never slow down to match their comfort level. It will never pause to let them catch their breath. It will never adjust itself to their expectations, their fears, or their hopes. The only thing that can change is the trader. And that realization marks the beginning of true psychological mastery. Because once you accept that the market is neutral, unpredictable, and indifferent, you stop trying to control it. You stop fighting it. You stop negotiating with it. And you start shaping the one thing that can be shaped: your mind. This final part is about that transformation, how a trader evolves from reactive to deliberate, from emotional to stable, from overwhelmed to in control. It's about becoming the trader who can face SPY's fast movements with calm eyes and a steady heartbeat. Let's begin. One of the first mental shifts you must make is learning how to detach from outcome. Most traders believe detachment means not caring, but that's not true. You can care deeply about becoming successful without caring about the outcome of each individual trade. This is the difference between being committed and being attached. Commitment says, I will follow my process with discipline. Attachment says, I need this trade to work. Commitment is strength. Attachment is weakness. Because the moment you need a trade to succeed, you lose objectivity. You start managing the trade with emotion instead of logic. You panic when it pulls back. You hesitate when it gives you opportunity. You exit too early because you're afraid to lose. or you exit too late because you're afraid to be wrong. When you detach from outcome, you stop needing the market to validate you. You stop seeking emotional resolution. You stop chasing the illusion of control. You start trading the present moment instead of your emotional history. And in that moment, clarity returns. The next psychological foundation is something simple yet profoundly misunderstood. Risk is not financial. Risk is emotional. Most traders think their stop loss defines their risk. But the real risk is the emotional reaction that stop loss triggers within them. Two traders can lose the exact same dollar amount and have completely different experiences. One trader feels nothing. They saw the setup, executed the plan, accepted the result, and moved on. The other trader implodes. They feel anxious, angry, ashamed, desperate, thrown off balance. Same trade, same loss, different mind. Your emotional reaction to risk determines how long you survive in the market. When the emotional cost of losing is higher than the financial cost, you are trading too big. You are trading beyond your psychological threshold, and the market will expose that imbalance every single day. This is why position sizing is not just a money management tool. It is a psychological stabilizer. When your size aligns with your emotional capacity, your mind stays calm. When your size exceeds your emotional capacity, your mind falls apart. Trading small doesn't make you weak. It makes you stable. It gives you the mental space to think clearly. It protects your emotional bandwidth. It allows you to operate with neutrality instead of fear. Most traders don't blow their accounts because they lack strategy. They blow them because their emotional threshold is too low for the size they are trading. The moment you understand this, your entire relationship with risk begins to change. The next principle is about slowing the mind even when the market is moving fast. SPY moves with precision and velocity. It forces you to make decisions quickly. But quick decisions are only dangerous when your mind is chaotic. The best traders make fast decisions with slow minds. Their thinking is calm, their attention is relaxed, their perception is sharp. They are fully present, fully grounded, fully focused on the now. How do they do this? They simplify, they reduce complexity, they eliminate clutter, they trade fewer setups, they make fewer decisions, they focus on structure, not noise. Because the more decisions you try to make in real time, the more emotional energy you burn. And when your emotional energy is depleted, your mind becomes reactive, erratic, and impulsive. A calm trader is a powerful trader. Not because they have special knowledge, but because they have access to the full capacity of their mind. When your mind is turbulent, you cannot read the market clearly. The chart becomes blurry, not visually, but emotionally. When your mind is calm, you begin to notice details that most traders never see. Shifts in momentum, subtle changes in the order flow, behavioral patterns in volume, structural pauses before breakouts. Calmness sharpens perception, and perception is the root of intuition. And this brings us to one of the most misunderstood concepts in trading: intuition. Many traders think intuition is guessing or acting on impulse. But real trading intuition is neither emotional nor mystical. Intuition is the mind's ability to recognize patterns faster than conscious thought. It is built through repetition, through exposure, through deep familiarity with the way SPY behaves. The more time you spend observing the market without the pressure to trade, the sharper your intuition becomes. But intuition only works when your mind is calm. Because intuition is quiet, emotion is loud, fear will always drown out intuition, ego will always distort intuition, impatience will always interrupt intuition. This is why the most intuitive traders are also the most emotionally stable. Their clarity allows them to sense opportunity before they can logically explain it. They feel it, not emotionally, but structurally, contextually, subconsciously. This is where mastery begins. Now we arrive at perhaps the most important psychological framework in all of day trading: detach from the outcome, commit to the process, stay present in the moment, and protect your internal state above all else. Because your internal state is the foundation of every decision you make. When you trade from fear, you see danger everywhere. When you trade from frustration, you see revenge opportunities. When you trade from greed, you see setups that don't exist. When you trade from desperation, you lose your ability to wait. But when you trade from neutrality, the market becomes simple. Not easy, but simple. You see flow. You see pressure. You see imbalance. You see liquidity pockets. You see opportunity without distortion. Neutrality is not emotionless. It is emotionally unburdened. It is the state where you are fully engaged but not attached, fully focused but not desperate, fully committed but not demanding. Neutrality is freedom. Freedom from fear, freedom from ego, freedom from the emotional cycles that keep traders trapped. And this freedom is what allows you to trade consistently. Now let's return to Daniel. After months of emotional battles, he began to shift. Not because he mastered a new strategy, but because he mastered himself. He learned to enter trades only when his mind was calm. He learned to reduce size until his emotions became stable. He learned to breathe before making decisions. He learned to pause when the market triggered him. He learned to accept losses without trying to rewrite them. He learned to treat wins as neutral data points. He learned to trade the chart, not his expectations. And slowly the chaos inside him softened. The tension faded. The noise quieted. He began to see SPY not as an adversary, but as a teacher that reflects his internal state with perfect accuracy, a teacher that rewards patience, discipline, and neutrality, a teacher that punishes impulsiveness, ego, and emotional decision-making. And one day, almost without noticing, Daniel realized something profound. He no longer feared the market. He no longer feared missing moves. He no longer feared losing. He no longer feared being wrong. His fears didn't disappear. They simply lost their power. And that is trading psychology at its highest level. Trading is not a journey of learning charts. It is a journey of learning yourself, your patterns, your triggers, your blind spots, your emotional limits, your internal narratives, your relationship with risk. Because once you understand yourself deeply, the market becomes dramatically easier. Not because it changes, but because you do. You become patient in a world that rewards patience. You become calm in a world filled with noise. You become neutral in a world driven by fear and greed. You become present in a world obsessed with prediction. You become disciplined in a world full of impulses. This is the transformation that turns a trader into a professional. This is the inner evolution that allows you to trade SPY with clarity, with confidence, with precision, and with emotional strength. This is the mindset that separates the 1% from everyone else. And now the journey is yours. Not to conquer the market, but to master your mind. Not to chase profits, but to build consistency. Not to control the chart, but to control your internal state. Because in the end, your greatest weapon in trading is not your strategy. It is the psychological clarity you bring to every moment. When the mind becomes quiet, the market becomes clear. And when the market is clear, your path forward becomes simple. Trade with neutrality. Trade with awareness. Trade with patience. Trade with presence. Trade with a calm and steady mind. This is the psychology of day trading large caps and SPY. This is the game behind the game. This is the mindset that unlocks peak performance. And now it belongs to you. If you've made it this far, something inside you is already changing. You're no longer looking at the market the same way. You're no longer looking at yourself the same way. Because once you understand that the real battle in trading is internal, everything begins to shift. Your decisions become calmer. Your reactions become slower. Your awareness becomes sharper. You begin to see your own patterns with clarity instead of judgment. This is how it starts. Not with a new strategy, not with a perfect entry, but with psychological awakening. With the moment you realize that mastering the chart begins with mastering the mind. Carry this awareness with you into your next session. Protect your internal state. Honor your emotional bandwidth. Trade with neutrality. Trade with presence. Trade with patience. And remember, the market will not change for you, but you can change for the market. You can evolve. You can grow. You can become the trader you came here to be. This is Mind Over Markets, where your greatest edge is not the pattern you trade, but the person you become. If this message resonated with you, if it helped bring clarity to your journey, then stay with us. There is much more to explore, much more to understand, much more to master, because the deeper you go into the mind, the clearer the markets become. Until next time, trade? Well, stay aware and keep mastering the only market you can truly control, the one within.